Ladies and gentlemen, welcome to the 26th episode of the Futurum Equities Podcast. It's the first one of 2026, so it's great that it's number 26 episode. As you can tell, I'm freezing in LA. It's like less than 50 degrees, so I'm wearing 3 different layers. But Daniel, how are you doing? I know it's been a couple weeks.
It's not cold here in Austin. Weather outside is not frightful. Like 70 degrees here. It's great. I mean, I gotta say, just for our audience out there, we're not old enough to make the weather our focus. We're not going to do that to you anymore. It's the last time we're going to start off talking about the weather. We can talk about your achy joints next, Shay. You can be like, man, my joints are aching.
I'm 32 years old. I feel like I'm at that threshold now where I can talk about tendonitis.
Baby, you're a baby. You're a baby.
Well, I mean, how are the holidays? Let's talk about the holiday. Like how did Christmas, New Year's treat you? I know you were summer tropical. You were trapped for a hot minute due to all the Venezuela stuff. Like, yeah, kind of crazy.
I got stuck in Aruba. I know, stuck. My tortured, privileged life. I was stuck there. I had to spend an extra day on the beach. It was kind of trippy though, because like I woke up, like hadn't looked at my phone because it was Saturday. Was in the gym. Surprise, surprise. I was in the gym at like 5 a.m. and one of the staff comes up to me and they're like, no flights today. I was like, huh? Because I was leaving that morning. I was like, leaving? Yeah, no flights. All the flights are canceled because of something about Venezuela. And I'm like, huh? And I looked it up and I was like, whoa. And then like I started calling, and trying to figure out travel and everything. And it was like, holy crap, everything. But like the whole Caribbean was shut down. So Aruba, for anyone out there who doesn't know this, like you look at a map, it's only like less than 20 miles from the border of Venezuela. Mm-hmm. So we're there in tropical paradise, but 20 miles away, Trump's sending fighter jets and helicopters, and he's like taking, Maduro in the middle of the night. But interesting, because Aruba's full of Venezuelans. So a lot of Venezuelan refugees, a lot of working there. And they were like celebrating because, every Saturday is a carnival there. And, the Venezuelan population setting off fireworks, playing music, dancing in the streets, extremely happy about the situation. So it was kind of, because I didn't really know what to make of it. I'm not a geopolitical expert in like policy with Venezuela. That's not my thing, but it was really interesting to have a chance to talk to Venezuelans on the ground and learn just how bad their situation was. And it largely it made me spend more time and learn about the situation. So, but yeah, otherwise I got a tan. I'm really tan. I'm darker than you know. And by the way, I know this show is not a political show, but things are falling back at home, like back in the motherland for you, right? I mean,
yeah, I know. Iran is hopefully it experiences a Venezuela 2.0. I know for the people they've been earning for it. My mom lives off of an island off of Dubai. It's called Quiche Island. If you guys aren't familiar with it, it's like in between. It's technically Iran, but it's in between Iran and Dubai. And she has no service. So I haven't talked to her in 2 days. Like they actually have a full blackout right now, and I think that it's different. What was that?
Didn't Musk like operate? Didn't he like push Starlink live?
I hope I saw that. I hope he did. I just think this is like maybe the time where they can strike when the iron's hot a bit, because that is just one nation that's been trapped a bit on this in between of just it's chaos there. And I think that the issue obviously is nuclear on the nukes that they currently have. That it's very different than Venezuela on invading, so it's not similar. But anyway, that's enough geopolitics. I know this is not why you guys are here, but that is something to monitor this weekend. I don't think the market's gonna price in that kind of volatility of a potential Iran experiencing a Venezuela 2.0, but it's something to monitor. Going off of Venezuela news, we can still talk about that. I mean, how does that correlate with the business case or stock market? I think during the 2026 predictions, one of the emerging themes for me was emerging markets. I was like, I think that's going to be an outperformer in 2026. And one of my vehicles for that was MercadoLibre. Everyone referenced them as an Amazon of Latin America. Yeah, you can call them that. I think it's played out, but maybe it's the PayPal, DoorDash, Shopify of Latin America combined into one ecosystem. Their flywheel is insane. And I think a lot of people reference them as the Amazon, but that's lazy because 40% of their business is Mercado Pago now, which is their fintech product. Like it is, they have a logistical moats. It's massive. It creates a high barrier of entry for any competition. You're seeing in the past, Amazon's tried to get in the space. You've seen C Limited get into the space with small market share. Like nobody wants to get in Latin America because what's the point of all that CapEx spend when MercadoLibre has been there for decades? How's this correlated with Venezuela? Venezuela was the third biggest market for MercadoLibre 10 years ago. They stopped really talking about it or using that as an emerging market for them because of everything that's been happening in that country. So who is the immediate beneficiary of a 25 million citizen country opening up all of a sudden? The flywheel of Latin America, when they already have all the bones in place in that region from all the investments they made 10 plus years ago. It's almost like a flip of a switch a bit where, yes, they probably have to there's some rustiness on what updates they need to be making over there, but it's very much like Chevron for the oil space where Chevron is going to be the biggest beneficiary on that industry for that region because they're the last ones to not leave. MercadoLibre has all the bones in place there. So I think you're seeing their price action this in 2026 or since that news story release on they're the strongest name relative performance. Strength is just picking up every single day. I think that before Venezuela, it was undervalued, 8 times EV to gross profit. Typical, the 4-year median is 12 times. So that's when our price target was $3K for the stock. Now with Venezuela opening up again, it's like what you always reference, Daniel, on China for NVIDIA. It's a free call option, essentially on NVIDIA's investment case. That's kind of what Venezuela is becoming for MercadoLibre, this free call option. So I know you're not very interested in the e-commerce presence, but you do love opportunities. So I'm wondering what your case is on capitalizing on Venezuela.
Do you think they should split?
Oh, I don't think they want retail investors. That's the issue. I think that's the only reason I could think about why
it's I think that, and again, this is probably more mental math than real math, but owning 5 shares for a small investor. By the way, 5 shares at 2,000 to 3,000 a share is not inconsequential for a small investor. I just think a lot of them are going to, so in the retail audience, it's just a really expensive stock on a per share basis because they got a very small float and a very small share count. But I do think this is one that if you made it more accessible, because I know a lot of people chase Newbank that want to chase the emerging market because it's $10, $12 a share. Because people want to get concentration. They want to get high volume of shares. And obviously it doesn't actually work that way because in the end, market cap is all those factors. But I think people are I bought, 3 shares for 2,000 and it goes up 20%. My 6,000 is now 7,200. It just doesn't feel the same to a retail investor as I bought, 1,000 shares of Bitfarm and now I have them at $2 a share. And if that thing goes to 20, I have 10x. Nobody expects the MercadoLibre to go to 20,000 shares.
Totally.
But in terms of the company and what it does, it's an N of 1 in Latin America. It's if you believe in that market, that you got to acknowledge what's going on in Venezuela, Colombia, Cuba, across a lot of the Caribbean, Brazil. The narco politics, Mexico, it's still so unpredictable. And so the one thing you just have to have that appetite for the fact that region does not have the same sort of politics. Every country has unique politics down there. You have everything from communist to democracy and much in between because a lot of those nations, like I said, are sort of democracies.
Yeah.
So you just have to kind of understand that the entire emerging market theme and trade is not going to work like the domestic one. And so you have to, it's a lot of people with China, because a lot of people feel the same way, the China stocks are super undervalued.
Totally.
Now, one thing, by the way, is did you actually see how much the Venezuelan stock market is up?
Oh my God. It's 10. It's not 10x since, is it 10x? I think I saw, it's something it's saying. Let me see.
And that's pretty wild, but it just goes to show that how restricted it was.
Oh my God. It is up. It's tripled. It trades like a meme coin. That's kind of crazy for a stock market.
I took all my money out of Fartcoin and I moved it to the Venezuelan.
I will say though, if I was wearing my corporate strategy hat in MercadoLibre, I do think a split is a no-brainer because just do a 25-1, trades a $75 to $80. $100 is a magnet from there, especially if you're undervalued, technically speaking. And then you just get 25% juice all of a sudden because more retail investor come in to provide more liquidity. And there's always a psych level for $100 on a stock when it's trading around the $80 level, especially when there's a good theme and narrative. Essentially why Rock Collab is going to hit $100 because they're at $86, for example. ASCS is just at 95. That'll be amazing if we see ASTS breaking $100 for the first time ever on the stream. We'll see if that happens next hour or so, but they're up 5%. Rock Lab's up 4%. The year of space. I mean, like, this is also my prediction in 2026. I think a lot of people are. It's just funny. It's a lot of people view that thematic in the lens of a traditional investor, value investor, where you just can't. I know you were participating in AI way before it became mainstream post ChatGPT. So like you do have some familiarities on being involved in a theme before it gets mainstream, where you see in fundamentals. What
There's trade-offs with it. There's just trade-offs. You just have to understand when you make those bets that you have a chance for an exponential gain, but you also have a chance for like an exponential loss. And anyone that's been through that, like a business with no fundamentals, just has to understand that like the ride is going to be different. You've got a ton of beta in these stocks. You've got a ton of volatility in the market. If a pullback or a meaningful recession comes, these things can go down 80%. And by the way, they could never monetize and at some point just go to zero. And you got to really make that decision of when does that happen and try to, decide when do you take a gain in these positions. Cause like, the AI trade now is solid. What I mean is like AI is a real theme. There's real dollars, there's real revenue. You can invest with some level of confidence that these companies are going to, at least the ones that are going to survive. But, and by the way, there's a few places this kind of trade happens. It's happening in the space theme right now. It's happening in the quantum theme right now. You're betting long term. It happens all the time in pharmaceutical because you're basically like my position in Viking is I'm betting on the best technology.
It's a binary outcome. Yeah.
A success. But if it doesn't eventually either get acquired or it doesn't do a distribution deal, the thing, even with a good product, it could fail and it could literally go to zero. So what your capital, like if you put capital into MercadoLibre or into Google or into, any value company, a Costco, like you're never worried about your capital going to zero.
Yeah.
You're worried about like, it could have a down year or even, a frustrating year where like it underperforms the averages. But you're never like, oh my God, my money's like at risk. Like my entire position in like something like Viking could literally go to zero. And so same thing with like an ASTS, like it's probably gotten more secure now that it has some contract value. But when you were early on in investing in that company, there was no contracts. It was just an idea. Oklo is another one of those companies. Like they haven't built anything yet. Like they have contracts, but they haven't actually even built, a deployed an SMR yet. And until they do, that's a risk. And that thing's up huge because the nuclear theme's another one. It's another big, hairy bet. And so again, it depends on your risk appetite. I think a lot of people like 10 or 20% of your portfolio, if you're young and you can take some big losses, you take your swings, but like if you're kind of like a person that's happy to just beat the QQQ any average year, those are not the plays. Those are not the plays. There's just too much volatility around them. So, and again, I did that with EVs. There was EV companies I thought were super interesting. They'd win a big contract with UPS. I remember there was one that got like a big contract with the US Mail. Can't remember their name anymore.
Workhorse. It was Workhorse.
Yes.
Yeah.
Workhorse. And I didn't bet a ton, but I probably bought like 5,000 shares and it went up and it went up and literally it's zero. It went to zero. It just didn't survive. And what I'm saying is like, and by the time I figured out that was happening, the capital's incinerated. It was gone.
Well, I agree on a lot of the points you were saying. I do think the lens of EVs is different, in my opinion, than space and nuclear based on the fact it's not consumer oriented. I think EVs was an absolute dud of it being consumer.
I mean, that was they were building for supply.
Oh, no. They were building for supply chain, but I think the TAM was juiced up based on consumers, and that was the issue with the EV thing.
Right, but the thing about your trade is there's a very high chance in nuclear, in quantum, and in space that it will be a winner takes most. There will be one.
That's a very good point. Yeah.
And so my point is, like, at some point we're going to see who the winner is, and so there might be two companies. So it might be Rocket Lab and SpaceX get 90% of the business, and you could have a third player that just gets wiped. And you've even seen it with like Uber. Like Uber just absolutely ran away in valuation from Lyft. There was a very long period of time where the two companies were trading at similar, at much closer valuations. But at some point, the market just decided Uber's the winner, Lyft is the other, and every other one of those rideshare companies, they're gone. They don't exist.
Well, you know why though? I mean, it's a really good point. I do want to go into space specifically because I agree. Yeah. The tier ones of space is really important to invest in, because I think that's like going on launches. I think it's going to be SpaceX and Rocket Lab. I don't think Firefly Aerospace. I think that's catching a bid right now. I think those types of names, the tier 2s, tier 3s, are going to potentially fade out because this is a very difficult space to operate in. Like, it's extremely difficult. There's going to be a duopoly in it. But really, when I say duopoly, it's the king and the prince. Like, SpaceX will still own a monopoly into this ecosystem. It's the anchor of the whole ecosystem. And that's why you're seeing a revelation of sorts in the space theme, even though they've outperformed last year. I think 2025 was the year that the market stopped treating space as a speculative story and started recognizing it as a potential, the builders of the next era of human capability. Like, there's the $1.82 trillion economy. It became much more realistic all of a sudden than it was communicated 5 years ago. So that re-rating was, it's maybe going to happen in a couple years rather than 10 plus years. This year, the explosive nature we're seeing right now is because SpaceX going public at what is rumored at a 1.5 trillion valuation, that's 65 times price of sales for this year. That forces a repricing of every single layer of the ecosystem. We're talking launches, we're talking LEO, we're talking orbital infrastructure. That's Rocket Lab, that's ASTS. Like, these are Planet Lab. Like, every one of those layers of this ecosystem gets repriced because now we have the anchor of the ecosystem getting priced this. So I think we're in this phase where everything in the bucket is going to move up because the whole industry is getting repriced. But the longevity of being a long-term investor, you need to pick the right horse in the race, because you don't want to invest in, like, if you're bullish in the internet and you did not pick the marketplaces built on top of the structural arteries, like the Amazons and Googles, your horse in the race was the companies building the dark fibers and yeah, exactly. You were done. You missed out, and that's a tough pill to swallow because that's generational wealth. That's why you have to be very specific in space. And you guys heard my spiel about Rocket Lab, and what Dana was referencing is they just landed the Tranche 3 deal. Like, that was their biggest deal in company history just a couple weeks ago. That added $1 billion in their backlog just from one deal. That alone proves or backs up a thesis of externally, people are seeing what Rocket Lab is selling essentially to the audience. Like, they won a major prime contract. That's validation. AST Space Mobile. Bluebird 6 was the largest, most powerful commercial antenna ever launched successfully just a couple weeks ago. That proves that maybe they are actually building the communication layer of space-based connectivity, and Starlink is going to absolutely have a place in that arena. But if you're an OEM, you don't want to give all your data to Elon. I'm sorry, you just don't. You need diversification. This is the whole thing about AI. We talk about this all the time. Infrastructure cannot have one source. It's impossible. You just cannot have that. So I think that this zero sum mentality is anchoring so many investors because they're viewing something as an opportunity, but in the lens of the king, why bother? That's not the case. Like, you need optionality. Like on CES, I think it was good transition to CES because you were live there on the spot, and I think that I have my 2 cents on what happened on AMD's CES event and why people were disappointed, but I would love to hear everything that went on because it felt like it was tech Coachella in a way, where just like a lot of stardom, a lot of updates, and it was great to see.
Well, the C in CES stands for chips now.
It's crazy. Yeah, it felt like a chip conference.
It was Chip Enterprise Show. Historically consumer electronics, but right, we had Vera Rubin full production. It became the moment you would have thought maybe GTC in March would have been the moment they would have kind of come out and said we're in production, pulling it forward, just accelerating. More efficiency, more power. Of course, 2.5 ton racks, 2 to 2.5 ton racks. This is just incredible. And NVIDIA basically complete redesign, just absolutely breaking physics. 6 new chips. Every part of the stack is new. And it was able to, it's able to deliver well above Moore's law in terms of, with only 1.7x transistors. And so it's very, very interesting though, is like, we've got two or three things happening now. You got like all these constraints right now, constraints in the market. You got memory, memory is going to become, this is absolutely going to be the year of memory. I'm really proud to have been banging the table on Micron for a long time. Like it was going to come. The record is coming.
I think it was in the 60s you were banging the table on Micron.
Yeah, and I was telling, and I had a chance to talk to some of these chip CEOs, some of these CEOs there. And look, we're going to see some really interesting things this year because you're going to see the memory allocation start to shift away from devices to make room
towards the edge, or what do you mean?
Towards just more RAM. We're going to need more memory to do compute in the data center, and it's a higher margin, higher profit business. So rather than, we could see some real big impacts to consumer devices because pricing on high memory, you might see computers and laptops and phones with big memory start to actually get affected in terms of price because
can you explain to like the listeners right now why the frontier models just need more memory in general? Like because everyone's like, why do we all of a sudden need? Why does GPT-5 need more memory than GPT-3, for example?
We've always needed more memory. To serve the model. And, you basically, and this is also, by the way, part of the reason why Grok was such an interesting thing. And people, if I can just quickly people, made the SRAM thing a big deal. And there's always been SRAM. Like that's not really a new thing, but it's another architecture. And it's another way to kind of brute force by taking multiple chips together. It's a totally different architecture than the way, NVIDIA does it in inference. So, in 24, 25, we've been in this era of training. It's been all about training, right? In 26, we're entering the era of inference. And inference is going to require more of everything. So if you think about like when you're training, you had like 20 companies training models, and you definitely needed a ton of compute to do that. But now when you have Gemini, right? So Shay, how often do you use your AI right now?
It's whenever I want to go through the noise on a headline, it just tells me what I use all the time. Everyone should be using it as a first step tool. So, but I every hour probably, to answer your question.
Yeah. But like, for instance, when you're serving a model, right? You need memory for the parameters. So you need, I'm just pulling this because I don't have this by memory, but like if you're using floating point 16, you're basically using 2 bytes per parameter. So what I'm saying is a model that has 7 trillion parameters, for instance, needs a absolute ton of memory. You're talking about on one parameter, it needs 2 bytes of memory, 7 trillion on one model. That's how big these models are right now. And so, you have just tons and tons of need. And then, of course, you have, different scaling rules. You have the size of the batch, the length of the sequence or token, the number of layers. These are all different things that impact the model, the use, and so I'm just saying, like, I look at Gemini and I'm trying to, like, this is harder in layman's terms than you think, But like you look at Gemini, we are already serving 10 trillion tokens a day. 10 trillion tokens today. So you've got the model itself that's serving all these tokens against billions and now trillions of parameters. And you've got many of these. And the other thing a lot of people don't realize is we don't just have these 5 or 6 frontier models. So right now, about 5%, Shy, of the world's data has been used to train the frontier models. That's it. 95% of the world's data is behind the firewall. So enterprises starting to pull their data in, which is 20 times more data than what we've used to train, to basically either fork models, use existing open source models, build custom models, and then serve with compute. We're going to have trillions and trillions of additional parameters and then trillions of tokens daily. Then add another layer. Because right now we're serving in kind of a single serve through generative. Wait till we're serving for agents. So an agent could have, if you're doing code generation, one person coding might have 20 agents running across, their IDEs across 5 different, applications that they're working on, or 5 different functions within an application that they're concurrently working on in Cloud Code. And, you have all this work they're constantly serving, constantly utilizing. And so all of this pulls on memory. And so for Vera Rubin to perform better and deliver inference at 10x or more efficiency, it simply needs more memory. And so, and now the other problem we have is we're seeing about 100x more utilization. Now, 100x, like I said, is kind of conservative, Shy, because like once this agentic thing starts to take off, it's going to be so much faster. So that was probably like a second year collegiate overview rather than like a high school layman overview. But like basically the TLDR is we're going from billions to tens of billions to hundreds of billions to trillions of parameters by multiple different models, now serving multiple and many different functions, because it used to be just language. Now it's serving language. It's serving video. It's creating, audio. It's also creating visual. It's then creating, like, you got industry specific models, like for healthcare and image generation or image review. You've got models for banking, for anti-money laundering and fraud. And what I'm saying is you've got all these different models, all these different industries, all concurrently with trillions of parameters of data. And you have 95% of the data hasn't even been served yet to touch AI. And then on top of that, by the way, we're creating so much data every day that is new data, both synthetic and real, that all needs to now be trained into the existing models and then served up. So anyway, there we go.
No, I mean, I do want to talk. I want to highlight more of this conversation because I think this should be a theme of this episode, because memory, like, so far the theme of 2026 has been memory. And why is that? I think this is the year of inference economics, like you just mentioned. I'm gonna try dumbing it down to high school level, but essentially what's happening right now is the training era, years 2022, 2023, was building these hotels for AI. 2024 was about inference, when you're starting to see like the networking plays, like the Broadcoms, the Stellar Labs, Marvells, like they were kind of in the spotlight last year. They're building for those hotels and training. Inference is, all right, you guys all come stay at our hotel now, all you individuals. Like, we have the rooms, we built the hotel, now come stay there. Memory is kind of how you make these new tenants return back to the hotel, by memorizing what their favorite meal was at the hotel, memorizing what their preferences were for the room, like tailor making it for the user to return back to the hotel because they had such a great experience. That is memory. And that's why it's so important for these model improvements now, because it's not going from bad to great anymore, these models. They're going from really good to great to really great to wow. It's just like slight improvements. Like Gemini 3, for example, Gemini 2 wasn't shitty. It was just, it
wasn't great. It's a lot.
It wasn't great. It's a lot better. That's a better term for it. It's better now. But that better
can always get better, but we still have scaling laws, and scaling laws require, look, maybe the simplest way, even getting dumber and simpler, you have lots of parameters, you have lots of data and cache, and you have lots of concurrent requests. So what I'm saying is like when you take those three things, big parameters, you've got to get the memory close to the compute in order for it to serve the request quickly. And you've got billions of people ultimately using this stuff, and you want it with no latency.
Yeah.
Memory. That's not compute. I mean, it is compute, but it's the memory that enables the compute to do that. So there you go. That's probably the simplest way to explain it.
So, and I think that the theme this year, though, at CES for me was AI is becoming memory first. So I think that's why you're kind of seeing a lot of the bids get validated. And it's also really funny because, like, again, you and I were very bullish on Google before the market validated Google as a winner, not a lagger in AI. This memory narrative is not new. It's like it's been here for like you mentioned, like you talked about 2 years ago, I think. It's crazy how vibe driven the market is in a way on repricing a stock when all of a sudden they're ready to price stock A because of this catalyst, when this catalyst has been very visible for years. I think maybe another tailwind of this was NVIDIA acquiring Grok for $20 billion, because that was their...
And I started there and I kind of I got off the reservation, but the long and short is NVIDIA acknowledged through the acquisition. I was advisor to Grok. I was on their cap table. I did very well on that deal. But the net of it is they had a very different approach to serving inference. And that was it, just super high speed language. They called it an LPU. Language, LPU instead of language, instead of compute or graphics or anything else. And they were very specific about it. That's what they were doing. And they did it very well. And so one of the founders, Jonathan Ross of Grok, was the guy that helped develop the original TPU. And so he had a lot of great ideas. He's kind of a beautiful mind, and I think Jensen, this was a talent play. And it was also his big acknowledgement that inference and the custom chip market is real. And he didn't have to say it because, he's always said they're a year out, they're a year behind, they're never going to catch up. Maybe. But we saw today, there was, comments from Charlie Kawwas at Broadcom, their huge ramp on V8, huge ramp on TPU V8. V7, millions of units a month. This is not XPU or GPU, it's XPU and GPU. So Jensen wants in. In cases if they can build a super efficient inference chip that can go right along the spine and sit in the networking ecosystem and take advantage of all the other NVIDIA architecture and orchestration, that's just going to make it more powerful. It's just going to make NVIDIA more powerful if it can serve inference at scale, at another level of scale with a different economics. And, he wants to get after that. There's no question about that.
Well, I think it's because first off, Jensen, Jensen every year at CES, he just tells you what's coming in this AI economy. That's his whole thing on how he treats that stage. It's less about talking about the demand for the product or what the guidance is. It's more of where AI is heading. He clearly was telling us that GPUs are being pushed to the edge now, the edge devices. And what he means by that, my interpretation was AI is not just going to be answering. You're not going to use AI anymore just to answer questions. AI is going to start planning, start reasoning, and start acting in the real world. Physical AI is going to become much more of a thing. So I think he acquired going off of that makes more sense now on why NVIDIA acquired Grok, because inference is very specific on their two different phases of how these companies use inference. I think the first one, it's called the reading phase, and that's where the model is just, you type a long prompt into the model and it processes the relationships across the full context. That is very different on the amount of compute that's necessary to answer those kind of prompts. I think that's exactly what NVIDIA GPUs were built to do. It's very much, I forgot there's a term for it, but that phase is very much in NVIDIA's lane. However, the writing phase, I think that phrase is called decoding. That's where the model generates output token by token. So it constantly has to reference everything that is already produced to stay coherent, like you mentioned. So I think that phase is not limited by just raw compute, but it's limited about data movements, how fast data can actually move between the processor and the memory. That is what Grok's architecture is solving, and that is what inference economics is all about. And I think it's going to accelerate because what Jensen was saying at CES, GPUs are moving to the edge devices. And that's when inference goes berserk. That's when things just go crazy.
Compute moves to the edge and you've got huge volume. And that's where physical AI comes in. That's where humanoid robots come in. That's where autonomous vehicles come in. That's where devices that sense come in. And all that becomes a combination of net new data that serve, And so basically AI is going to leave the data center. The data centers are going to keep getting built. Like there is no slowdown in that. But the fact is that the next $1 trillion+ of TAM is actually, there's another multi-trillion dollar TAM. And it's outside of the data center build. And it's going to be putting compute at the edge, which is what we're already doing this, but it's scaling it up to be able to do more and actually have to do it, by the way, with really low power. So you heard, like Qualcomm had a really good show, announced a whole bunch of robotics customers, because that's what they're really good at, for instance, is low power. So by the way, I got that call right. Remember when I was saying Qualcomm's going to enter the robot race?
It's because they specialize low power on edge devices. That's Qualcomm's whole thing. So like
they can take their autonomy platform for vehicles now and put it into robots.
Yeah.
Ton of great assets there. But yeah, I mean, I think, again, what an amazing accomplishment for NVIDIA with Vera Rubin. And, let's talk about AMD a little bit. Cause I'm sure we have a lot of people out there that want to hear about AMD. Look, AMD, also announced its MI500 Helios. And I do think, by the way, absolutely that this inflection is a huge growth. Like we think like 8 to 10x revenue from today over the next couple of years for AMD. And by the way, that's not really, in our opinion, at the expense of anyone else. That's just them maintaining and growing their share, their existing share, and existing customers. Because two things. One, the market needs competition. So there's competition going to come from AMD, which is more of a direct competition. And then, of course, you have the custom chips, which is more of an ancillary competition. But also AMD's, it's doing well. They're technically speaking, they've done some really interesting things with memory. They've built a really compelling rack scale solution. There's still issues with in a lot of people's minds with software. Is ROCm competitive with CUDA? And I think they keep making strides there. But I'd say largely the market prices it that they don't believe yet that AMD can truly compete there. But I do think they offer a very compelling alternative. And again, in an era where every chip that can be built will be sold, I do think AMD will do quite well. They also are betting on enterprise AI. So, NVIDIA has their RTX chips designed for like air cooled in a data center for an enterprise that wants to do some small training loads and inference at the edge or in their corporate data centers. And AMD announced their MI440, which is their version of that, which is going to be an alternative to, RTX to offer enterprise. Because we really like enterprise data centers. I mean, it's a big question. Like, are enterprises going to build their own data centers for AI? Like, I know they're going to continue to modernize their existing for compute, but like, are they going to continue to build for AI? And by the way, another big advantage that AMD has is their CPU. And I don't know if you guys know this, but with agentic compute, like CPUs are a rate limiter. So I think it's something like, with Vera Rubin, like Vera is like, it's like 8x the cores, of Grace. I think it's like 6 to 8. I don't have it memorized, but it's like 6 to 8 times cores. And by the way, when you're doing agentic workloads, like for agentic to serve correctly, you need a ton of CPU. So, AMD, who's been very successful on that side, it should do quite well, with their CPUs. And so that was another little thing that, we're paying attention to. ARM's going to do well. By the way, ARM is, for anyone that doesn't know that, Vera is ARM. NVIDIA doesn't always make that very clear, but Vera is an ARM-based CPU. And by the way, I think ARM's still going to be making some AI announcements soon too. I just want to make that. There's an AI chip coming there. And they've got a captive customer, by the way. I don't think people know this, but like Stargate is a captive for ARM. So if ARM can build an AI chip, it could end up being full of ARM AI chips.
I mean,
mark that down, everybody.
I want to give my perspective on the AMD for CS.
Sorry, I kind of.
No. As I'm doing that, I'm sorry. I'm looking. ASCS is 50 cents away from $100. They are up 10% today. So I'm like, watch it. No way. I'm not selling. So, yeah, I get that question a lot. I don't even know what space economy is going to become. Like, it's too early to sell the winners of that arena. But going on CES, I think if you went into CES expecting Lisa to come out swinging with like, we're taking market share away from NVIDIA right now message, like, I get why you were disappointed, and maybe a lot of investors traded thinking that was going to be the narrative, and that's why it faded post CES. But that's not what the business thesis should be on why you own AMD. I mentioned earlier on the stream, this is the largest industrial build out we've ever had in the modern markets. You can't rely on one single source for that, aka NVIDIA. You need an alternative. So I think that AMD's whole thing is building a durable alternative platform for the next decade. And that was the tone that Lisa had on that CES event. And I think that what Lisa actually did on stage was lay out a vision where AI is not just cloud trained clusters, like you mentioned. There's a CPU angle. They're going to have to exist everywhere, like a hyperscaler data center. The enterprise server rooms that you just said that were never designed for AI and has to get like renovated for AI. The PCs at the edge, inside all these robots, inside these factories. Like, there's so many layers that AI has to kind of start touching and kissing that you need a second alternative source. And I think that AMD is just trying to make sure nobody's just comfortable depending on NVIDIA for the most important infrastructure built out in modern history. And I think that's underappreciated how big that opportunity is, because a sub 10% share of the AI accelerator market, that's causing AMD to triple the revenue next 4 years.
That's why we think it could be like 50 billion plus.
Yeah, that's enough of a
tailwind. Keep getting revised up.
That's it's like,
we didn't really talk about
early.
It's good to see. You heard that they're basically looking into how to expand capacity. Like, people keep kind of looking because of the TAM is TSMC, the compute TAM. Now they can build, and the energy could stop them from even energizing these things. But like, how many we can build? Because until Samsung and Intel really start to ramp production on any advanced data center AI chips. And that's happening, by the way. Those companies are winning deals, winning designs. But like, I can almost guarantee you there will be wafer announcements for Intel 14A that'll come. I don't know if it'll come how quickly, but that's going to happen. But the net of it is like, everything that can be built will be sold. Like, I feel like this is like, I have to keep saying this, like, it's not zero sum. Like, if Intel has a wafer, that can produce a competitive AI chip, it's going to produce it. If AMD has allocation of TSMC, they will build and sell MI. They will build and sell everything they can build. So looking at like what the total allocation and what they have, and then what they can build, you could almost put it against the part and the timeline that you have and the price per part, and you can figure out the revenue that they're going to generate. So I feel very confident that you will see like a 8 to 10x revenue over the next couple of years for AMD and just their AI accelerators. So, does that equate to stock price appreciation? I mean, it should. Does it? I don't know. Like, I mean, the market, the weighing machine, and it's a voting machine, so.
Guys, ASTS just broke 100 live on the stream, doing a post right now about it. But going off of what you were saying on TSM, I think it's really interesting. I think Wei, the CEO, I think there's one individual is making sure there's not an AI bubble. And what I mean by that is they are the gatekeeper of the whole AI build outs. There's one AI factory. It's TSMC. Hopefully, Intel comes, like Foundry. There's some bullish commentary.
Samsung and Intel are going to join the party. It's just
eventually. But right now, it's just TSMC, and I think that because the whole build out relies on just them right now as a single supplier or factory for that, they're controlling the pace. Like, they could be expanding capacity at an irresponsible rate if they truly wanted to. If Sam Altman was running TSMC, I would actually be very worried about bubble forming because there would not be an adult running the only AI factory.
I mean, you have literally physical material constraints and physical manufacturing constraints. Like, you can't just be like, we're going to build more. You got to build fails. It's the same problem with memory. Like, memory never builds more capacity because it's like these markets crash and burn. So they kind of do these volatile, boom and bust cycles because sometimes the market just collapses. So,
because eventually what you're talking about is supply shortages turn into gluts. That's always the case. So like eventually there's going to be a glut in this build out, guys. Like when Daniel and I are very bullish on AI, like we're not blindly bullish. Like eventually we're going to hit a point where there's going to be a prolonged digestion phase of this build outs where the glut appears. I think it's going to be 2028, maybe end of 2027. We're nowhere close to that. But yeah, I just want to add that color to what you were saying.
Yeah. So let's talk about software, like how we serve AI, right? So you've heard me. I'm super bullish on agents and enterprise. One of our predictions was a year of enterprise AI, year of agentic AI. And this is why we need more memory. It's why we need more compute. This is why we need more CPUs. This is why all the things we need. Because ultimately, when enterprises start doing this stuff at scale, this is orders of magnitude bigger than, like, what's my favorite thing to say, Shay? That the LLMs are not the TAM for AI.
They're the basic inputs.
This is
not the actual product.
It's the parlor trick. It was the first thing that everybody saw that AI could do, that they're like, oh my God, I'm going to use AI. That's it. That's what it was. And I mean, you're seeing even like the ChatGPT healthcare app, and like the ability though to sort of start to industrialize these or use them for specific verticals, and tons more data ends up being ingested. Now people are going to give their health data and start getting very, very personalized health. And I mean, I'm already seeing cases all over the internet. People like, I solved this problem I've been having, like health problem.
I also heard Claude was the best for that too, by the way, which is crazy.
Claude's great. I mean, look, Anthropic is a juggernaut. Like, I am not that bullish OpenAI. Because we're building our own, intelligence AI application, and my coding team, 100% Anthropic, Claude Code. And by the way, I'm doing Claude Code now too. I'm teaching it to myself. So, I've got like 5 terminals open on my screen right now. I'm actually learning. Here's what I want to build. Everybody give me an idea. I want to build an application that looks across the macro data presented daily, the market data presented daily, my personal takes, the financial data that Futurum keeps, as well as the market data that we keep. And every morning I want to have an app that opens up and tells me 5 stocks that could have over a 5% move in a given day. And I'm going to day trade this app. You
guys heard it first. Daniel's trying to replace me live on stream. He's trying to create a Shay.
You guys know I don't trade. You guys know I really don't trade. But my point is, like, I'm going to take a negligible amount of capital, and I'm going to try this application and see if I can get daily high volatility moves and use Claude Code to build the application to serve it. But there's so much you can do with it. Anyways, it's just moving really fast. But like, what does this mean as you see like ChatGPT go into healthcare, as you see Claude Code enable companies to build project management apps or workflow applications for their businesses that maybe used to be done in a CRM or used to be done in an ERP?
Down. I mean, software down.
And then the question is, because here's my sort of ultimate thesis. Like, I do think like 5 to 10 of the big software companies will make it. They will make it. They'll make a pivot and they'll figure out a way. Because businesses like the SAPs, Oracles, Salesforces, they are so deeply entrenched in companies. I'm not saying they love working with them, but it's the entrenchment and the integrations are so deep across the business. Very hard to change. But they are going to have to change their business models. They're going to have to move to a token model, output model. They can't do a seat-based model because most companies' seats are going to be less people, more agents. So the business model is going to break. And then on top of that, though, where they really add value, governance, compliance, sovereignty, and security. Because one thing is you can build your own apps, but are they secure? Are they, do they meet all the compliance requirements? And by the way, over time, the cloud providers are going to build APIs and connectors that do all that stuff. So it's really, there's a thin time right now for these big software companies to basically make a pivot. But here's what I will tell you. The market just simply doesn't believe they can do it. The market does not believe that these companies are going to be able to pivot. And they're all on sale right now.
Or I agree. First off, it feels like you're just in my community this morning. That's literally verbatim what I said is happening to software this year. I do think that
your community, my heart.
I think the market's unwilling to wait until that transition happens or until the winners and losers reveal themselves. Like I think Claude specifically Claude Code is a great example of this when we're talking about it's improving fast enough and the velocity of improvement from just 6 months ago. The market's now starting to realize, I think, that AI tsunami I'm talking about, that whole space is very vulnerable. It's actually a lot sooner than anticipated. I think a lot of time, like software is in a very weird, awkward positioning of they're caught between these startups become shipping products so fast, so rapidly and cheaper on one side, while hyperscalers are also embedding AI into their massive ecosystems on the other side. So now they're caught in this in between of like, we're not producing products fast enough. We're also not the cheapest. And also, so like now what do we do? We're in a transition phase.
And they're giving amazing like development environments just to build like Vertex or, Google's environment. You got Bedrock and you can just do amazing between that and what you can put together is really amazing. But what I'll say is this is as a positive, because there's a lot of negative, these companies have not shown any they're still growing and their rate of growth is not considerably like ServiceNow's growth consistent. Adobe has actually outperformed every quarter.
Yeah.
So it hasn't shown up in numbers yet. I'm not saying it won't show up in numbers. It just hasn't shown up in numbers yet.
I think the whole space is just getting the premiums getting re-rated. It's 45 times free cash flow is now the default's 30 times, for example. That's what's happening in the re-rating. So it doesn't have to mean that stock goes down 40%. It could mean the stock goes nowhere for 2 years until that multiple re-rates towards that.
I think it's a lot of wait and see. And I think a lot of investors aren't willing to pay the premium to be in.
But what you just mentioned, though, AI security, like that's not going to get disrupted by Claude improving. Like all these multi-modules or these products, the AI native startups, like they're not trying to disrupt security, cybersecurity. Like they're just creating these digital products that are going to have to get protected by the CrowdStrikes, the Rubrics, the Zscalers, Palo Altos of the world, like Cloudflare, for example, as well. Like, but the market is treating all those SaaS companies in one bucket and moving them with each other. So I think that's kind of where it looks weird right now. I think that's going to stop. Specific niches within the software ecosystem will still hold strong, but I think the CRMs, the DevOps tools, marketing platforms, like all of them are, might be dead money.
The thing to say about all of this is they're not doing it yet.
Yeah.
And I think that's why those, and also those companies, most of them don't trade at ridiculous premiums. I mean, Palo Alto and like those companies, they get pretty hammered even when they make what I think are good moves. They've been kind of very fairly valued. Maybe Rubrik has been one that's gotten a lot of retail support and maybe trades at a really high multiple given its earnings. But it's growing fast. I want to take just a minute maybe at the end here and talk about the AI utility trade. You and I were really into this for a while and we've been quiet lately. And I get a lot of like, you still like Cypher? You still like Iron? You still like, what's your thoughts on Nebius? And like, I still love them all. I mean, not all of them equally, but I still absolutely love this trade. If you're right, and it's late 27 where we hit glut, and I actually think it's like longer than that. I don't think we'll hit a glut even that quickly because that's a year to 2 years out is what you're saying. I think we're probably 3 to 5 years from potentially hitting overcapacity because we're barely using this stuff yet. So if we're actually starting to use this stuff at scale, if Jevons paradox is true, if we're going 100x in terms of utilization almost every year, if models are really going to 7 trillion parameters, if every company is going to be optimizing open source models and using against all their data that not only existing today, but created into the future. And then, of course, we can only build energy and energize this so fast. I think we're going to be constrained a lot longer. So I think where energy exists, energy will sell. I think I still to this date, like I like the ones that are a little bit more pure utility than the ones that are trying to do the full AI.
The marginal compute players is what you're referencing, like the CoreWeaves and like those kind of names.
Well, I think Nebius is really making some interesting moves to try to serve the enterprise, which I think is their specialty, and I think they're being rated for that. I think CoreWeave just has a nasty balance sheet. They just have a nasty situation.
Well, they're NVIDIA's puppet, in my opinion. I don't think they're a real. Should be a standalone business, but yeah,
they're just it's just ugly. And so while I think they're going to keep, I think their sales will keep growing because I just think people will buy. They need it. They'll buy it. I just don't know that model can have the margin can work over the long period of time if they can ever make money. And so that's my concern with that one. Like Iron's the most interesting because it sits in the middle. Like, are they trying to be kind of an energized play and they're just energizing compute for a hyperscaler? Or are they going to try to be like more of a Nebius? Or do they want to play that part? And standing up that capability it's not trivial. Go ahead.
No, I think Iron has the cheapest GPU economics out there on their energy efficiency. I think they've seen what Google TPU efficiency can offer their ecosystem. So I kind of want them to take that risk. I hear you though. It's very risky what they're trying to become. It's a huge matzo ball hanging if they fail. But they have the most important KPI metric out there on the amount of energy they can actually produce for these data centers. Like, why not leverage that to become something bigger? Highly risky, but it's something where I think they're getting punished a bit now because 2026, I think the AI cycle has moved onto its next phase. I don't think the limiting factors, can we stand up this data center anymore? For example, that was like the topic last year. I think it's all about, can we run AI efficiently at scale? And I do think that shifts the stress point towards arenas outside of the GPU REITs. And I think that's kind of why they've been struggling a bit. I don't know. What's your take on that?
So we're about to wrap up. What I'll say is this. My Cypher position is more than 10 times larger than any other position I have in utility. And I have a position around Iron. I have a position around Bitfarm, and I have a Wolf. So I am in all of them, but I'm 10x bigger in my position in Cypher. I like their model the best, personally. All right. So we have like a minute. I want to just say hyper around. We have a ton of comments. So it's great. I'm going to ask you just, for a rapid fire on three questions for you from the audience. Okay. One, is it too late to buy ASTS?
No. Maybe in the near term, but if you're talking long term, I think this is going to be $100 billion plus company if they actually build a communication layer of space-based connectivity. Like, that TAM is massive. So I
remember, not financial advice, but
not financial advice.
Your opinion for yourself, you would potentially still add here.
I have not sold one stock, so that tells me I'm not selling. But entry points are the name of the game. Like, I have a massive cushion. My entry points is in the teens in this name. Like, that's so different than participating at $100. Like, maybe wait and cool off until it hits the 21-week EMA and gives you some cushion on your entry. But this theme is very young. It's a decade-long theme. I think that if there's going to be a handful of winners, and I think AST Space Mobile will be one of those winners. I don't know when you should get in, not financial advice, but I think it's going to be one of those names that is here in 10 years in the space economy.
All right. So I had a dinner with the CEO of Zeta. We had a bunch of questions on retail momentum. Zeta had a huge week, partnership with OpenAI. Look, I love this company as a real world example of AI ROI. They are delivering and helping companies understand ad tech and doing it with a level of accountability that's very interesting. They're still very small. David Steinberg, a great CEO, great energy, very passionate. I think if you're looking for companies that are doing offering an AI product and actually willing to be held accountable for the performance of AI at the application layer, it's an interesting company. Last one for you, Shay. Palantir. It's kind of moved sideways and around. It's been between 150 and 200. It's not gone up. I mean, I think when Venezuela happened, there was a lot of laughs about, the good thing we have Palantir, the best technology on the planet, intelligence and whatnot. But it's not, it's not been a rocket ship lately. It certainly isn't even close to what it was to its very all-time highs, right? Didn't it get almost to 200?
Listen, do you think Anthropic should be worth more than Palantir?
No, that's stupid.
Exactly. That's what's happening.
Stupid right now, actually. I'm not going to say it's always going to be stupid because Claude.
No, but I'm just saying, like, the market, like, multiple valuations is just like what you're willing to pay for a specific asset compared to other assets in the market. As of right now, Palantir is the picks and shovels winner of this LLM arms race. Like, doesn't matter what company, what LLM wins this race, you need in order to infuse that insight into actual operational insights, you need Palantir, like the next layer. So I think that if Anthropic's worth 350 bill, if OpenAI is worth 500 bill, there's zero world where I think Palantir should be worth less than them. And especially because Palantir has a Rule of 40 score of 120. So they're doing this while being highly profitable. So nobody outside of Jensen is actually capturing more profits in this AI economy than Palantir. And to me, I'm like, why would I ever sell that winner? I already de-risked my position. I sold all my risk way too early in the 60s and 70s. But the rest, I'm just letting it ride out. It's all profits until the thesis breaks. And every 3 months, it's strengthening. So it's a top 5 position for me still.
Yeah, I just want to end by saying to all my fellow Sophites, what a week. What a wild week. I mean, this thing hit almost $30 on Monday. It got 2 downgrades, went down to under almost 26, lost $4 in a day because of 2 ratings. And it's now up and over it's almost 28 and 28.30 again today. So it actually is a little bit up from where it came into the week, despite all that chaos. What do you think is going to happen there, Shay? I know you're kind of small position there, but you liked it as a potential this year.
Yeah, it's a top 10 position for me. I think I'm treating it as more, it's my risk off name in my portfolio for growth, which is nuts because I know a lot of people, it's like the high beta. For me, it's like, it's a pillar that I think we're entering QE. I think we're entering a phase where this specific arena is going to perform really well in the next 1 or 2 years. And I think that, like you mentioned, Noto is highly incentivized for this stock to hit a certain price for him to make his bang for his buck. So I think that everything's aligning for this name, and I think that they've executed flawlessly, and they don't really have the crypto vulnerability that Robinhood has, because half of Robinhood's revenue is crypto transactions. So that's why they move with crypto prices. Crypto prices are showing a lot of weakness for whatever reason. SoFi is kind of insulated from that, but also participates in that in a way. I like SoFi's a top 10 position for me. I've been adding in the mid 20s. I'm late to the game, so I'm not like pounding the table, going all out on it. But when it feels like it's trapped between $30 and $25. So every time it hits the 25 level, I've just been adding a lot.
Yeah, I think that's great. Still love it. I haven't sold a single share. No plans to. We'll let y'all know if I ever do. What a show. We're back. Apologies. We should have left some more time for the Q&A part, but
listen,
I brought a bunch. I mean, there were so many comments, but we brought a bunch of them in. So
it's on.
We were
out for 2 weeks. We had a lot to catch up on. So again, thanks for hopping on. I think this is great that we're third straight episode we've done exclusively on YouTube. We're going to build this out 2026 the rest of the year, and hope you guys enjoy the weekend. The market is roaring. It looks like it's very green today, up 1% almost. So tune in next week for episode 28. Thanks for hopping on.